Shri Gurubhyo Namaha. Welcome to our online teaching academy, Ekalaiva. Cbse Class 11 Accountancy. Today we are going to see rules of debit and credit. Okay. We follow the double entry aspect of bookkeeping. So for each transaction, when we have a debit aspect, we will also have a credit aspect. Okay. Now we will see what is the meaning of an account. An account is a record of transactions under a particular head. It is a record of transaction under particular head. Whichever account you are considering, for that particular account, we have to record the transaction. Whether it increases or decreases, or whether it comes in or whether it goes out, whether it is the receiver or whether it is a giver. So these aspects have to be, both the aspects have to be recorded. Okay. And it records the amount of transaction. It records the effect of transaction, and it also records the direction of the transaction. Okay. When we talk about amount, it is the monetary value of the transaction. Effect actually means whether it comes in or goes out, increases or decreases, whether it is an expense or loss or gain or income, likewise. So the effect is recorded, and direction, who is the person, who is the receiver, who is the giver, okay, or from which source it comes. So that is the direction of transaction. So an account records the amount, effect and direction of any transaction. Okay. So here we will just consider cash account as an example, and we'll see what is the format to enter this or to record this cash account. Every account has two aspects, a debit aspect and a credit aspect. So first we will have the date column, then we will have particulars, then we'll have journal, folio, and then we'll have amount. So the same columns are repeated for the credit side also. Date, particulars, journal folio, and rupees. So here on the debit aspect, we have to write the date, which year, for example, 2020 on October 1st. Okay, so you have to write like this, the year, month, and then the date. And from where the transaction comes. Suppose as we have taken cash account, if cash comes in, debit what comes in and credit what goes out is the rule for cash, and we have to just mention from where we got the money, from where we have received the amount. Okay, so that has to be mentioned here, and the amount has to be entered here under the amount column of debit. Okay, suppose if we pay money to someone, then on which date we are paying, to whom we are paying, and what is the amount paid. Okay, so this dual aspect of receiving and giving, both the aspects are shown in the account. Okay, so this is how we have to record the transactions of each and every account. Now we are going to see what is the traditional classification of these accounts. Okay, traditional classification of accounts. When we take the traditional classification of accounts, any account is classified into personal, impersonal. Okay, under personal we have natural personal account, that is when we have any person's name like Ram, Shyam, Ramesh, Suresh, etc. So when we get any person's name in the transaction, then we have to classify it under personal account. Then when we have the name of any enterprises or company or any organization, firm or anything else, when we have the company's name or the business organization's name, then we have to once again bring it under personal account. And then is representative personal account. Here, this represents a particular person or group of persons. For example, when you take the outstanding rent account, it actually means that you are supposed to pay rent to the particular landlord. Okay, so this represents a person. Okay, so that is why it is classified under representative personal account, right? This impersonal account is further classified into two: real account and nominal account. All assets of the organizations will be brought under this real account, and the expenses, losses, incomes, gains will be brought under nominal account. Okay, so under personal account, the name of a person if we have in a transaction, or if it is the firm's name or organization's name, or if it is going to pertain a particular person, we bring it under personal account. When it is any asset, all assets should be brought under real account. And when we have any expense or loss or income or gain, it should be classified under nominal account. Okay, so now we'll see the rules for these accounts. So personal account, what is the dual aspect of personal account? When we have to debit and then we have to credit. For personal account, always we have to debit the receiver and credit the giver. Okay, so that is a rule for personal account. And when it comes to real account, which is about the assets of the organization, debit what comes in and credit what goes out. Okay, so this is a rule for the real account. And for nominal account, debit all incomes, debit all expenses and losses, and credit all income and gain. Okay, so for nominal account, the rule is debit all expenses and losses, credit all income and gain. So these are together called as the golden rule of accounts. Okay, so without this rule, we cannot enter or record any transaction in our books of account. That is why it is called as the golden rule of accounts. Okay, so once again, we'll see the rule. For personal account, we have to debit the receiver and credit the giver. For real account, we have to debit what comes in, credit what goes out. For nominal account, we have to debit all expenses and losses and credit all income and gain. So today we have seen how to classify accounts based on traditional method and the golden rule for the traditional classification of accounts. Thank you.